Hello, I'm Greg Bennell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights, help boost your trading potential. Coming up, fresh trade tensions kicking off what's often the toughest month for stocks, plus semiconductors taking center stage with new shifts in the chip trade. And Apple's bull versus bear debate. Are record gains enough to outweigh looming risks? Trader debaters are standing by. That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. Welcome to September, historically the worst month for stocks. Right now, the S&P 500 is down a little more than 0.75%. We have all that trade uncertainty. We were talking about a court ruling against President Trump's tariffs, bond yields spiking on the perhaps thought that they won't make as much tariff revenue. It's all just a bit of uncertainty, isn't it? And that's not only the trade tensions we're seeing in the world right now, India with the United States as well. So we do have the S&P 500 living up to its reputation, at least on this first trading day of the month of September. Let's jump into the heat map. I'm curious to see what's happening beneath the surface right now. And you can see some of those high-flying tech momentum names that have carried this market on its back pretty much the past 2 years, showing a bit of weakness today. It's not too dramatic. And NVIDIA, Microsoft, Google, all down between, 0.5%, 1.5% to 2%. But it's enough right on the screen right now so that we're not off to such a great start. Want to hone in on Tesla up there. Actually, only down modestly right now. There's a Bloomberg report I was saying Tesla only has around 600 orders in India since launching in mid-July in that market. China deliveries are down as rivals win more market share. But apparently in Turkey, they're enjoying some fortunes as well. So maybe it all comes out in the wash for this name, although the stock has been under pressure in recent sessions. Want to show you PepsiCo as well, getting a pop today to start the trading week. The snack and beverage giant up, last time I checked, about 6%, coming a bit off of its highs this session. Maybe that was a 6 and now we're at about a 3. Wall Street Journal reporting the sources, of course, not confirmed by the companies. Activist Elliott Management taking a $4 billion stake in the company. Usually when Elliott Management moves in an activist role, they're looking for change. So it has investors watching the name and maybe a little bit excited. And that's your market update. All right, joining us now for a more technical take on what's happening in the markets here in Amin, Jason Natick from our Direct Investing Educational team. I hope you guys had a great August. We are refreshed. We are back. What are we looking at here?
Yeah, great to be back again, Greg, all charged up and ready to go for the new season. We're going to start with the broad market index. We're going to look at the S&P 500 as you put it. So we're heading into September, which historically means that the S&P 500 usually doesn't fare too well on historical. Looking at the data back, we see typically the S&P will drop about 1 to 1.1% usually for the month, which doesn't seem all that big, but it's been a weaker month coming in after the sort of dog days of summer, if you want it. So autumn isn't just for falling leaves. It also has a habit of dropping, and with this, we might see spiking on the volatility side of things. Historically, volatility has also risen going into September and October there, with the VIX being pretty much subdued for the rest for the summer months there. And so what we want to look at though is coming back to the S&P 500 and see what's taken place so far. We've seen it come off just a losing streak just in the mid-August period, between August 14th to 21st. It had its longest losing streak of the year. It was like 6 straight sessions. We were in the red there, and then we see this big rally on the chart. I've got it pulled up here. I've just marked it up, and this was, of course, the Jackson Hole speech, where there was probably opening the Fed chair. Powell said, it's opening the doors for possible rate cuts for this month in a couple of weeks' time there, and that really got the market buoyed up there. But what we do see is this rising wedge formation here. Now, this is critically a strong pattern. It is indicative of a bearish reversal potentially, and where you want to see that bearish reversal is a break below that lower bound. You can see since we had the April lows and we started trending back to the upside, we've seen it respect the lower bound quite a few times. It's just touched and tagged off of that. But today, It's actually broken off of it today. Now, this doesn't mean we're headed to the downside just yet. We do want to see confirmation, so a couple more days if it can fail to get back in within that ascending channel. But if it doesn't, then we could see it start heading towards the bottom there. We do see the next sort of support level maybe coming in at that 63, 6400 level is where to look at. But you know, if things do get a lot worse from here, then we do 6200. But keep in mind, we do have a few market moving events that are going to happen this week and in a couple of weeks' time. That could act as another further, wind in the sails of the S&P 500, marching past maybe its highs of the 6,500 and onto another new level. But that'll be remain to be seen in the next couple of weeks' time there.
My calendar is right. September 17th is the big doubleheader. Bank of Canada and the Fed on the same day, so that will be a market mover as well. So that's the broader market. Obviously, very careful to watch given September's track record. I think you got semiconductors on the mind too.
I do, yes. So the ticker I've pulled up is SMH. This is the VanEck Semiconductor ETF that I've looked at. So coming into why the semis have got me interested is, of course, we just came out of an earnings report. There's a couple more that are left to report that are big names in the space. NVIDIA had their reporting last week. Stock was lower after the earnings came out, but the big data that to really parse through for NVIDIA was the miss on the revenue on the data center side. And what that indicates to us is there's little fractures maybe in what the spend is going to be towards the data centers going into the future. And that really caused NVIDIA to really be flat at the end of the day. It didn't really move. We had Marvell report after that, and they had a significant earnings miss, weighed down by R&D costs, of course. But the big thing that broke the camel's back was on Friday. I've got it marked up on the chart over here, and you'll see this big red candle that formed here, and that was Baba's report. Now, Alibaba's report, what
making
was
their
notable,
own chips, right?
They're making their own new chips.
They see an opportunity in the market in China.
Exactly.
Yeah.
They're making their own new chips. There's obviously a little bit of a vacuum since there have been export restrictions with NVIDIA's. So they're stepping in, and China's obviously a little bit hesitant with taking American chips now, of course, taking more, being more scrutiny, more scrutiny over it. So this is really, shaking up the market a little bit, and we saw that big pullback. And also, when you have companies that are, generating 70 to 80% gross profit on this, there's a lot of companies that are going to come out for your sumptuous lunch that you have. And so the competition is hot and thick, and we should see like more this space get heated up more, especially in the China region. And then finally, we've got Broadcom coming in with earnings this week on Thursday. That'll cap out the semi space really on the big level. So it'll be interesting to see what they say. What we have seen though so far is we've seen just sideways action. We've hit new highs in the semiconductor space, but it's tagged off of it and it's made a classical head and shoulders pattern. Another reversal here. This seems to be the theme where we just want to see a breakdown. So 280 is the support. It's kind of just teetering there right now at 284. If it breaks down further below here, we could see it actually hit this support and maybe get down to this new support level at the 260, which might be the next zone there if the news isn't faring so well there. So that's one to keep an eye out on there.
Interesting stuff. I watched so much TV in the 80s and 90s. My head speaks in jingles. Whenever I see this name, I hear, fall into the gap. Remember that was a commercial?
I do remember that. We're dating ourselves a little bit, but
totally. No one under the age of like 40 would even know what I'm talking about. But you're talking about Gap.
Yeah,
I have no idea what you're talking about.
Kieran has no idea what we're
So I'll
talking
tell
about.
you a little bit about it.
Yeah, one day it'll hit you, and you'll be on board. But
That's why I have you guys.
all right, but it's not just us that are off hiatus. It's back to school season, so all the kiddos be going back to school. So what comes along with that? Well, back to school shopping, and Gap and all of its many brands will be kind of amongst the stops many families make when they're piecing together their first day out their outfits. Now, Gap had earnings last week, and by and large, everything was positive. They had their earnings. They met street expectations for the earnings per share. They met on their revenue, outpacing the retail sector at large. So that's good news. And they actually led by positive sales growth on its three biggest brands, Gap, Old Navy, and Banana Republic. A little bit softer from Athleta. It's a much smaller portion of the business, but results we're wanting there. But some of the other news, maybe not so positive, is the big tariff concern that's still floating around. Yes, we know the court case is out there. It's still pending decisions kind of later into October. But the CFO recently came out and increased kind of the impact that the tariffs would have on their bottom line, raising it from 100 to 150 million to the range on the top side at 150 to 175 million. So a significant announcement, and this is actually leading to kind of the Gap kind of kind of assessing their margins. The margins for upcoming year as low as 6.7% lower than it was at any point last year. But let's jump quickly into their chart. We can see a couple earnings periods ago, there's a big gap down, but the stock kind of steadied itself and was able to kind of find its footing and move forward. But what I've noticed on the chart is that the stock was never really able to breach out over that $23 level and fill in that gap. So it's been stuck kind of in this sideways consolidation pattern. But the stock did get traded up on the earnings that came out last week, but there looks like there's been some, likely some profit taking coming off, and we've got volume at the bottom of the chart. When we hit the top end of that range, the stock has pulled back on some considerable volume, and there's some couple big red candles. So it's one of those things that it's looking like it's heading down towards the bottom end of its range, towards $19, and it failed to cross over its 200-day moving average. That cross above might have signified a push higher, but now we've kind of re-entered the zone. We'll see where we can end up from there.
Interesting stuff to watch. Thanks for that, guys. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try out the TD Active Trader Live platform, or the TD Active Trader platform. Can't put live in there everywhere. That's the show name. Try it risk-free. Open a practice account. Click on the Try TD Active Trader button. When you're ready to switch to a live account, simply export your workspace and start trading for real. It is time for the main event, trading, debating. This week, the stock in the spotlight is Apple. If you haven't heard of them, they make popular consumer electronics, iPhones, iPads, Apple Watches. Now you know who I'm talking about. Before we get going with our debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's get back to the stock of the hour. Apple, what made you guys pick this stock to debate?
As you mentioned, Greg, Apple's obviously been regarded as an innovation hardware company, and you think about some of the innovation highlights. I think about being a music junkie, CD Walkmans, and then the big transition to the iPods, which is seems a relic of the past now, but
Kids don't know how easy they have it. They can access every song that's ever been recorded just with a
scroll.
They used to have to carry around big binders full of CDs.
Yeah. And then they had the Nanos as well, and then the famous Apple versus PC commercials where they're really touting themselves as the cool kid on the block. So that's really propelled their growth into what it's been, and really displaced BlackBerry at the time. I remember when I was in school and everyone had the BlackBerry in the first year, and next thing you know, it's all about the iPhones. So anyways, we thought, hey, out of all of these companies, we haven't done Apple, so let's put them to the test and see what it's about.
And I would say that Apple is truly one of the iconic U.S. brands, right? They're right up there with when you think of U.S. companies, it's Apple. And here's something, it might not be a financial debate here, but I think the Apple versus Android question you might ask somebody has replaced maybe boxers versus briefs. So you've got a little bit of a change there. And then, this
age-old debate.
Which one is Apple? Both boxers?
Yeah, what is Apple?
I didn't dig too far into that, but it's probably the only Mag 7 we've got left on the docket that we haven't debated here. Hey, and third biggest company by market cap behind Nvidia and Microsoft. So hey, the prime for discussion here on the debate.
All right, let's get into it. Time on the clock. You each get your 2.5 minutes to make your case. Then we'll give you some time to counter. As always, you draw from the hat. Jason got the bull case. You know what? I didn't test this to see. Okay, it's still working.
It's still good.
working. I was going to test it before the show. Jason, you've got the bull case. Why don't you kick things off?
All right, let's do this. All right, so let's let this number sink in. As of 2023, there's been more than 2.3 billion iPhones have been sold, and that's billion with a B. Okay, so they're everywhere, right? So let's pay homage to the golden goose a little bit here. iPhones is a huge revenue driver, making up 52% of the company's revenue, and sales still remain robust with over 230 million units sold annually since 2020. So there's been no dip. There's an estimated 300 million iPhones out there that are greater than 4 years old. So that's leading some estimates to put it at to expect more than 240 million units sold here. So, and heck, the annual day, what do we have coming up next Tuesday? I think the 9th. So mark that in your calendars. It's basically a national holiday in the States when the launch of the new iPhone's coming out. So that's appointment watching there as well. But Apple is not a one-trick pony. They sell lots of other products. They're very well diversified in terms of their revenues here. We've got Macs, we've got iPads, we've got wearables, and let's not forget about services. This is something that's relatively new in the space, but it's just something it's helping to push Apple's revenues over $400 billion annually in 2025. And it's the services like Apple TV, music, and other subscription services to provide that repeatable, the bankable sources of income. And then that's actually making up 19% of the revenues from the company. And between the music and the TV, there's over 100 million subscribers for the company. So that's big news here. So with that said, let's go take a look at the charts. We want to make sure we have a good look and see kind of what some of the strong moves are making. So pulling up on the chart here, one thing I've noticed here is that the stock has been was certainly depressed earlier in the year, but has broken over the 215 level, which is kind of been a happy place the stock has been trading at in a little bit of time. So it gapped down earlier in May, preceding its earnings event. We've since been able to fill that gap in. But one of the nice things here is with some of the more recent moves, we've seen not only the price cross over the moving average, but we've also seen a golden cross of the moving average themselves, confirming that event. So we've been able to see some positive pricing going on there. Looking more at some strong moves that we're seeing in the start. I'm going to change my study over to take a look at over the Bollinger Bands here. Ever so recently as well, we've seen the stock still continuing to trade in the top half of the Bollinger Band zone. It was riding the top half, and we've seen it come back towards the middle line on the band. What's interesting here is as the volatility has constricted, we've seen the stock bounce off that center line, confirming its pace with that bullish move that we've seen over the last number of months.
All right, you laid out a nice case there. I can see hearing the entire time, just watching you while you're talking. I can see the wheels move, right? It's like, that's what you're bringing. That's what you're bringing. So
I gave it away, huh, Greg?
what are you bringing as the bear?
I'm going to be representing Team Bear today, of course, and let me start off by saying that Apple's like a blockbuster franchise that started with a masterpiece. So great, the iPhone, of course, was the original hit. It changed the game. It broke records, captured imaginations, and then now we're at every sequel since then has been a watered down version. Okay, so we're at Fast and Furious 10. I like to call it Slow and Tame 10, but pick your pick. Still profitable, but no one dares call it innovation at this point. So let's talk about the iPhone first. You mentioned the number of sales that they make, how many units they sell. The problem with that is the growth is stagnating. And this makes up, as you said, 52% of their revenue right now. You've got competition in China, which is fierce. Apple's actually dropped down to 5th position now. It used to be in the 2nd spot, but it's fierce. It's significant competition from Huawei and Xiaomi as well. Now, in terms of growth as well, when I think about it, okay, if this is the big primary revenue driver, what's the growth projected? iPhone revenues projected to grow at 5% over the next 5 years. That's a single digit. We're not talking about double digits here. Globally, people are also keeping the devices longer, and upgrades are more like oil changes than actual cultural moments with them. The second thing is regulators. They're rewriting the script for Apple. So the EU, of course, we know they've scrutinized Apple and they're tearing down their walled garden, as Apple likes to call it. The ecosystem, which is the App Store revenue, opening it up to messaging standards, restricting Apple from gatekeeping some of the repair materials that it has. And then the final thing also about innovation and the wearables, yes, what about the new releases? Sure, you got AirPods, you got watches, and let's talk about the Vision Pro headset. A product that costs $3,500 and makes you look like an extra in a sci-fi B movie. All right? Hardly blockbuster worthy, if you ask me. All right, let's look at the charts though. We'll see what the talking is happening. So I wanted to pull up Apple charts, and yes, like most of the Mag 7s, Apple's kind of done that V-shape. Not exactly a V-shaped correction. It's kind of consolidated. So we saw this sort of ascending pattern that it formed in. It was resisting at the 215 level. It did have a breakout over here, but more importantly, what we've seen is from the start of the year, where it hit those highs of 260, it's been making lower and lower highs. And this upper channel or upper sort of downtrend has been respected. You can see the bounce just as of the most recent price action, that 230 level bounced off of that. Here's the one I want to point out. We have an inside bar candle reversal pattern over here that just formed. Again, indicating to us we have a reversal. Today's, of course, a down day, so we're heading back towards the 225, 215 level in the support area.
All right, persuasive arguments both. Gentlemen, you haven't lost any of your mojo from the month of August. You got 3 minutes now to go at each other. Take it away.
All right, let's take this on. Apple has undoubtedly been in the headlines. I'm surprised we didn't hear about the tariff conversation from you right off the top,
it's coming.
it's coming. I figured that it might be. You know,
something for the Apple.
They've got some exposure, right, with China, India, and Vietnam being their major producers, but they've been shifting mainly out of China. In India, will be making as much as 65% of the iPhones. I know there's been concerns with India in there, but there's been some real positive headlines recently domestically, with one analyst out of JP Morgan saying CEO Tim Cook's move was a masterclass in managing geopolitical expectations, and they've invested $600 billion in U.S. manufacturing, stopping short of device production, which we know that's not necessarily feasible in the short term, but focusing on components for AI investments, semiconductor infrastructure, as well as a big play in the cloud spaces.
And talk about that since we wanted to bring up tariffs. Yes, so you're right. It was a masterclass. They did remap their sort of supply chains fairly quickly, fairly efficiently, but it doesn't come it comes at a significant cost. We know that the tariffs-related costs, they've already shelled out a certain amount, $800 million in Q3. This upcoming quarter in Q4, that's projected to be a $1.1 billion that they're going to shell out. Now, what does that mean? Of course, but that's a 15% earnings risk just from tariffs. Now, and we know that the U.S. and India are still trying to figure it out.
Right.
They haven't come to terms. They haven't come up with some deals. So there's still a risk there. So just moving from China to India, it just seems like it's the same place that's happening again. Plus, you can't supplant a Foxconn plant in the U.S. or in Taiwan, or even with Taiwan being a risk major. So those are a couple of things that they want to also look at. Also, what I will talk about in addition to the tariffs is the supply chain that we talked about. So China and Taiwan are the big ones that we have. But you've also got, even the diversification efforts into India and Vietnam, even domestically in the US where they've committed some. That's going to take a lot of time. But what does it also mean for those iPhone costs? What are you paying now? $2,000 for a phone?
But if there's one company that's able to withstand some of these short-term pressures, it's Apple, sitting on the mountain of cash that they have. Right, we're talking $200 billion of cash in near cash alternatives. So they've got a nest egg of.
That's like keeping cash under a mattress, though, Jay. What are they doing with it?
Well,
they're not deploying for anything innovative. They've got to put something to the use. And then let's talk about the supply, because you talked about the customer base, 200 million units. They're not monetizing their users that they have in the way that they should. Let's talk about the AI.
Well, let's also talk about the stickiness of their ecosystem. That's where everything comes together. Every release that comes out, everything is very thoughtfully designed to kind of build on each other. That once you're in the Apple system, Apple ecosystem is a very sticky place.
Yes, and it's a walled garden, as they say. But what are they doing with it? How are you monetizing? How much services are you possibly going to send to those users? And then we haven't touched valuation. Like, we're talking about a trailing multiple of 35, forward multiple of 30, way above its 5-year averages. 5-year average, I think, is sitting at about 27 on the trailing and about 30 on the forward. So still way above it. But what are we paying a premium for without AI on it?
So much passion. That was great. I loved it. What was the cash pile again?
$200 billion.
Yeah, I got to pay my two sons in university's tuition this week. I wish I had a cash
I'm sure
pile.
they can get some
even a
grants out for
fraction.
their
Just like a Scrooge McDuck kind of pile is what I'm picturing here. So.
Like that. All right, it's time now to jump into the platform, talk about possible options trades around Apple. If you are a bull, what's a possible way to play it, Jay?
All right, if we're bullish on Apple, one way to play that is through selling puts. Now, the one way, the couple of reasons that we can wrap our head around selling puts is that it's you're hoping to sell some premium and hope the stock will stay above your strike price. You collect your premium and you can continue to do that down the road, generating a repeatable source of income into your account. Another reason why investors will sell puts is can be a kind of a leg into buying the stock itself. If you do get assigned on your puts, you're obligated to buy the stock at the strike price. Ideally, you've sold enough of them so you can then reduce your effective book cost into that. So with Apple being a stable company, Apple one that's raised dividends over the last 13 years, sitting on this big cash. Yes, there's some international trade tensions that are playing, but if you feel like Apple is a good buy for you, then selling puts could be a way to accomplish that. So let's jump into the platform. I'll drop what we've got here. Earnings are a little bit away, so we're not going to be focusing on earnings event itself. So we're not going to be going out into later October. But if we look, I've found something around 45 days here. When we're selling options, it's not uncommon to keep time frames a little bit shorter, so you're not giving too much time away to allow the market to move against you. So I've elected to, for this example, to sell $215 puts, and looking at our chart, that was an identified resistance point. The stock has then breached above that. It was something that it butted its head against many times, as we can see earlier in the year, and finally broken itself over that 215 level. If we can sell puts at 215, taking in around 235, 250, that means we're giving ourselves a break-even point around 212.5. So that's well below. If we go to the option chain as well, kind of put some math behind it, it's well below the priced in expected move. If I take a look, my priced in the 230s early in the day. The combined premium of the at the money straddle is around $15. So that pushes us very close to the 215 strike we were thinking about. And then looking at thinking about our goal for this trade is to have it expire worthless and out of the money, so we can keep all of the premium that we've taken in with the trade. The delta, which is a stand-in for the probability, and the money is only 20% right now, meaning that we stand an 80% chance of this expiring worthless and out of the money. So selling 215 puts would be one way to take a bullish trade on this particular event.
Other than being assigned and then owning the stock, hopefully at a price that's reasonable to you if you enter this trade, any other things to think about?
Yeah, so we're thinking here max loss on this particular case would be, because we'd be buying it, the lower the stock goes. We've locked in a purchase price. So the lower the stock goes, the more we're to lose. Now, if Apple goes to zero, that's max loss territory. So we're talking $215 less our premium. That would be worst case scenario. But with any trade, we're not obligated to hold to expiration. So if things aren't going your way, buy them to close, right? That's not to manage your trade, not a set it and forget it type of activity. So that would be some advice.
Important thing to remember, manage that trade. If it's not going your way, if you are the bear, how could you possibly play it?
Yeah, Greg. So kind of we were thinking along the same lines with Jay in terms of the pricing, but in this in this instance, when I pulled up the chart, what I was mentioning with Apple was it was rejecting off of that bearish downtrend. So we're seeing reversals at these at the tops that when it does hit. And so based on that, the trade a bear could put on, if you're looking to play the downside move until it gets to a support level, would be a bear put spread, which is what I have on the chart right now. So what we're looking to do over here essentially is buy the $230 put, which is putting Apple exactly at where it is right now. It came into Friday, it was at 232, so it's dropped in pre-market, and now it's at 230. And selling the 215 strike put. Now, we're going out to the December cycle over here, so we're giving time. We're trying to buy more time on our side for a couple of reasons why we want to do this trade. One is looking at the volatility profile. So if I just bring up the options chain for a second, we can see the volatility is relatively low. Almost at 8%. And typically, if you expect volatility to rise up in the coming months, that's going to buoy this trade being a net long trade. So that's one of the reasons we can get, the premiums won't be as expensive typically when volatility is high. So we're expecting that to be kind of aiding us in the trade. And then, as Jay mentioned, we've kind of eyed the same levels. We think 215 is the next level where it could arrest. And that would be a good move down. So this trade essentially is going to, right now, when I set it up, it was costing about $4.65. It's a spread, so the difference between the two strikes is $15. So $15 minus what your cost is in this case, let's round it up to $5 and be generous, would be about roughly $10 to $11 is what you stand to make a profit should it hit that 215 price.
Well, you stand to make a profit. What's the downside?
And the downside is if it doesn't go down and instead goes the other way, by our timeline that we have. So if it rises to 230 and above, we'll start losing a bit of value on the premium. So essentially, in this case, if we're paying the $465, it's $465 in a single contract. That's what we stand to lose.
This is the rare situation where we both could be right on our chart to trade at the same time.
We just want the price.
Two different strategies.
I'll play the other side.
Yeah.
You get it on the other.
Interesting stuff. Thanks for that, guys. Laying out the bull and bear cases for Apple. Just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. And before we move on, Jason, you're going to elaborate on customizing that options chain.
Yeah, that's something that I know we both do kind of on our platforms to get the information you want. So TD Active Trader is not a one-size-fits-all all experience, and what you can get out of the option chain is no different. What I'm talking about is that when we were looking at the option chain, we might as well go to that now. Is that I was looking at the delta to identify the expected move, or sorry, the probabilities of in the money at expiration. That's not a default column on the platform. You've got the ability to really make this your own. So I've created one here that's got delta, theta, and I happen to have the midpoint labeled in as well. But really, you've got the ability to add in here anything something that really works for you, and I'll show you quickly how to do that. You'll notice I'm going to take you to the top right-hand corner. This is the kind of right where the stock price or the quotes are. We're going to look for this, the 3-line menu. We call this the hamburger menu. Anytime you see a hamburger menu around the platform, that's where you're going to be able to make some customizations or adjustments to the specific tools. So by clicking on here, we're going to be editing the option chain. So let's go ahead and choose the option chain. Now we bring up a selector that gives us all of the available columns. So if I get the columns out of there that we're using right now, maybe we'll just make one that's for liquidity. We want to maybe have the bid size. We'll put the ask size on there. We'll put in the volume. And maybe we also want to put in open interest. I'm going to put those all in there. If I go ahead and hit apply, lo and behold, as you'd expect, all of those columns are now on the screen, so I've got access to that information at the tip of my fingers. But we're not done yet here. Let's go back to that hamburger menu in the top right-hand corner. Going down to template management this time. Look, in this particular case, you can see that I've already saved templates that are going to allow me to get the data that I want. I've got a template created with probabilities, a template created with Greeks, and the one we were looking at earlier with delta and theta. If we wanted to save the current one that we just created to maybe make a volatility, we're just going to hit save current, and you can name it as maybe we'll call it liquidity. Make sure my typing's right. No pressure to get that right the first time around. And now, if we go back to our hamburger menu at the top of the screen under template management, there's our liquidity template. We can now toggle between these. It's really nice and easy. No recreating the wheel each and every time. You're getting the data you want at your fingertips when you want it.
First day back at school, you don't want to spell liquidity wrong. You'll be staying after class and spilling it out on the board 100 times.
You got it.
That's also a relic of a age gone past.
Yeah,
Kieran was not ever punished that way either. All right. If you have a question about the TD Active Trader platform, or if there's a stock you want to see our debaters go head-to-head on, just send us an email, td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. And if you can't join us live, just be sure to visit the YouTube page. You can catch up on all the previous debates. And if you're there and you're doing that, the link is right there at the top. Don't forget to like and subscribe. All right, before we wrap up, gentlemen, what are some of the key things that you are focusing on for the rest of the trading week? What is on your radar?
Greg, big one for me. When we look at the sort of key waypoints, that's going to be, of course, NFP coming out on Friday. That's non-farm payrolls numbers, as well as we've got the unemployment rate. Non-farm payrolls are going to be vitally important this time around because first consensus is sitting at about the 75,000 mark. Previously came at 73, but this is the first report after the July revisions. You remember what shook up everything, where they came out with the numbers and they had to backtrack on the June.
Made us change our
numbers.
mind. Is the U.S. labor market as resilient as we thought it was? Right?
Absolutely, and I mean, looking at those numbers, there's definitely broken pieces that are showing up there. So with the numbers coming in, this was the July numbers came in way less than expectations. The Jackson Hole speech alluded to the fact that they're probably going to look at this very closely to help them sort of pivot into their decision, maybe set that dovish tone that they're coming into this, the FOMC meeting later this in a couple of weeks' time. So those would be the two things. That's going to add some volatility going into Friday. Now, coming on to the other side, it is still sort of the tail end of earnings week. One of the names I'm going to look at is Zscaler. I've got the chart up. This is a cloud, based security solutions provider for secure internet access. It's been up about 53% year to date so far. This is reporting earnings today after the bell at close. This is going to be the Q4 earnings expectations, about 80 cents on the EPS side, and revenue of $706.9 million. Now, EPS is going to be 9% down overall year to year, but on the revenue side, that's a 20% year over year increase. And the guidance, guidance from the CEO is they're expecting right within that range, 705 to 707 million. Now, one thing that's important about this space and why I'm particularly looking at it was they've beaten earnings estimates every quarter since 2021, Zscaler. So they come in with a lot of expectations, and both with a wide margin, both on the EPS and on the top line number. But other than that, we also saw back in July a little bit of consolidation happening in the space. Palo Alto Networks acquired CyberArk. Now, and you think of the two biggest players, it is CrowdStrike and Palo Alto Networks. Zscaler has about a 4% sort of market share. But what's going to be important is they have a strategic partnership with CrowdStrike. And so they partner up with on different applications there together. And they've also just launched their Flex program, which is the subscription-based program with a significant number of clients. So this is what I want to look at. Coming to the charts, they've had this strong sort of bull flag pattern. We saw this strong rise up and it's kind of consolidated, which is a classic bull flag pattern. We just want to see the break to the upside. Expectations with earnings is a $27 move, roughly about 10.5%. We know earnings historically this season has been about, the average has been a 7.5% move, but the levels we're looking at is a 305 on the top side, 260 is the support, but 200, it could go down as far as 250 if it does make that 10% measured move, but we're looking for clues to see possible clues about consolidation and down the road over here. So one to keep an eye on.
Interesting one to watch. Last week I was noticing Oracle only because it had a bit of a rough day one day. What's coming up for Oracle?
Yeah, well, they've got earnings tentatively set for Monday the 8th, but in terms of what's to expect from them, we've got positive outlook year over year on both a EPS side for $1.47 that's up nearly 6%, and on the revenue side they're looking for $15 billion, which is almost 13% year over year. So the street's expecting some pretty heady news from them, regardless of the downturn that we've seen lately. But AI is one thing with what you were just talking about. AI is one of the things we can never get around. It's a buzzword. It brings everybody together. Oracle's got lots of expertise there, for not only from a cloud computing perspective, but also their hardware line of business is really set up to be right in the mix there. There was a recent announcement back in July around Oracle and OpenAI partnering to kind of self-fund some data centers. Just to kind of give some expectation here, each 1 gigawatt data center factory costs anywhere from $35 to $50 billion, and that partnership plans to build 4.5 gigawatts. Could cost as much as $500 billion to bring that to life, and this would actually increase U.S. Gigawatt data centers by 20%. Right now, there's existing 22 gigawatts of data centers. This is a pretty big deal in terms of the AI space. But turning to the chart, let's see. You can see there absolutely was a big red candle there, and that's actually kind of we can see they've been moving up since earlier in the year, up about 120%, trading in a really kind of tight pattern. But recently there was kind of a head and shoulders pattern that's been completed, and that big red bar actually sent us down below the neckline of that, which could, that was kind of the discussion point I was going to have this morning, is if we can stay above 230, 250 might be a reasonable expectation heading into earnings. But if we can confirm and break down below 230, 210 might be the next logical place for this to stop and hold. And you can see even with the green bar on the chart today, we are still in down territory, confirming that break below.
All right, great stuff as always, guys. You came packed with information. I know you're going to bring it every single week. We have returned, but this is the show we have for you this week, and we've run out of time. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching.